Now let's look at the other type, the trending type of market. So as you can see, a trending market occurs 20 to 30% of the time. Now, again, this is not a hard, fast percentage. What I'm trying to sort of point and get across with these percentages is that majority of the time the markets are bracketing and ranging, whereas very, very seldom or far less likely are markets trending. Now again, this varies, guys. When there's a lot of fundamentals in the market, when there's a lot of central bank action, then it's likely we see trends occurring more often. But central banks and fundamentals can go quiet for quite some time. I mean, take for example, 2014. We saw a lot of bracketing markets because there was very little going on, as all the central banks had kind of almost reached rock bottom and were already sort of into their QE program. So crucial you understand, that these bracketing and trending markets do change and they do shift. And the important thing for you to understand is not necessarily what the percentages are, but what are the identifiers of when we move between bracketing and trending markets. So let's look at trending markets and some of the characteristics. Firstly, markets are said to be trending when there is very little responsive other time frame participants. So remember, bracketing, we said buyers initiate at lower prices. They continue to initiate until they run into responsive sellers. When they run into responsive sellers, those sellers, as prices move higher, will eventually turn into initiative sellers. That initiative then forces prices lower, and eventually buyers stop initiating and they then turn to responsive buyers at lower prices again. And this continues over a period of time. Now, the reverse is the trending market. There is very little responsive. Now, just give you a basic example just to illustrate this. If you were to look at, for instance, this volume profile we have as an example. Let's say, for instance, that a new piece of news came out and that OPEC delegates had decided that they were going to pump to record oil inventories. And what occurred over the period of the day was prices continued to sell off all day. Now, straight away, you've got to say to yourself, who in their right mind, as a longer-term institution, it's influential, who would look to want to stand against something very, fundamentals that are very new to the market? And if you think of it that way, you'll quickly realize why no one would want to be a responsive buyer. Now, it's not to say that you won't get any kind of buying. Of course you will. This would be much shorter time frame buying, liquidity providers, with very short-term type strategies that would be providing some form of liquidity. But again, relatively speaking, there will be very little muted responsive buying. And that's the key to identifying whether a market is trending or bracketing. Then, we said to be trending when there's a strong divergence of price away from fair value. So again, it's crucial to always interpret and look, where was maybe the previous day's fair value? Where did the market accept price the previous day? As well as, how have we been accepting price over the last couple of sessions? If you find all of a sudden that, we've been accepting value relatively well, and all of a sudden on one day the market very quickly begins to move away from fair value, that's an early identifier of potential trend that could be developing. Then, trending when a series of day auctions moving in a clear direction, so one time framing. Again, I will illustrate one time framing for you at some point, but again, just important, one time framing is a control factor where we see the auctions moving in one direction. And then we have very minimal overlap of value areas. We will talk about overlap of value areas again at a later point. But by overlap, we merely mean, if the value area today was, say, between the price of 30 and 40, minimal overlap would mean if tomorrow we suddenly trade between 20 and 30. So very little overlap between today's value area and the previous value area. And then the end of a trend occurs in two distinct manners, initiative or responsive. And we're going to talk about this as we go a little further along. I'm going to show you some interesting examples, and we're going to develop some strategies based on finding those, not necessarily guessing where those tops are, but I'm going to show you a couple of key clues that the market gives you when it is trying to actually turn around and we run into some form of responsive buying or selling. So we get 3 parts to a trend phase, and this is crucial to understand because, again, you need to be thinking about these factors when developing your strategies. So you get the early part of a trend, which is the trend setters, and this is the phase where effectively a new piece of information is in the market. Participants want to aggressively initiate because prices are trading at an extreme discount or an extreme premium based on the new information. So that's the early part of the trend. We then have the mature part of the trend, or the maturing phase of the trend, and this is kind of the point where the information is still being priced. It's still relatively good to trade, but we're starting to run into a little bit more responsive type price action. And then we sort of got the end phase, which is where we run into other time frame initiative sellers or buyers, and that's the point where we almost get a little bit of an overshoot based on the information received. So important to understand that there are different phases to a trend. So whether you catch it early on or in the mature phase or in the late phase, you can develop various strategies just based on what point of the actual trend that we are in.